IFRS. It sounds like jargon, but it's an important concept to understand in accounting. IFRS stands for International Financial Reporting Standards, and it's something you can use for your private, unlisted, small or medium-sized business. But the key questions are, what exactly is it, and does it apply to your small or medium company? In this video, I'm going to cover what exactly is IFRS, the difference between IFRS and local GAAP, what is the purpose of IFRS, why do most large companies use IFRS, and finally IFRS and your small business. Before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you real quality advice from real qualified accountants. Now, this opening section is actually very short. But in the most simplest way I can actually think of, IFRS is like a dialect of accounting. Whilst accounting and numbers are the language of business, there are variations of the accounting language known as accounting standards, basically principles and rules. Here in the UK, for many years, it was UK GAAP. GAAP, standing for Generally Accepted Accounting Principles, was used in the production and presentation of financial statements. These financial statements included a profit and loss account, a balance sheet, and quite often a cash flow statement. In the US, it was US GAAP. In Germany, you guessed it, it was German GAAP. Now, the issue with so many local GAPs can be compared to apples. Let's suppose UK GAAP is a green apple, US GAAP a red apple, and German GAAP a Braben apple. Fundamentally, an apple is an apple, and likewise, fundamentally, accounting is accounting. But like the apples, each GAAP has its variations. To begin with, the apples are all of a different colour. They have different levels of firmness, taste, texture, sweetness, and bitterness. Each GAAP has variations like the apples, and quite often if you were to produce the same set of financial statements using the same numbers under UK GAAP, US GAAP and German GAAP, some of the key metrics like profit and net assets would often be different for a given period. Therefore, a set of accounts in the UK was not always consistent with a set of accounts from the USA. As a footnote, the USA has not fully prescribed to IFRS just yet. Instead, they are taking an approach of convergence, that is, narrowing the gap between US GAAP and IFRS. In fact, there are a number of countries that apply convergence as they retain their own local gaps, often for political, legal and cultural reasons. At the beginning of April, we granted early access to the Accounting and Tax Academy membership site. In July of this year, we're opening our doors to everyone. Our members will have access to in-depth tutorials, free downloads and exclusive discounts. And the best part is it's absolutely free to join. Head to the link in the description box below to register your interest today. The goal of IFRS was to essentially harmonise accounting standards, principles and rules into one globally accepted, understandable accounting dialect. The key really is consistency. Like our apples, if we took the green, red and Braben and blended them together into one consistent apple that is enjoyed across the world, whether you are in the UK, US or as far afield as Australia, you know what you're getting when you're crunching into an IFRS apple. To provide a little history, the development of IFRS gathered pace in the 1990s when interest was expressed by the world's stock exchanges in a globally accepted set of accounting rules, which would, amongst other benefits, make accounts more consistently prepared and hence comparable and encourage investment on a global scale. The European Union, for example, made a decision that from 2005 its listed companies should follow IFRS. This resulted in thousands of listed companies across the European Union switching from local GAPs to IFRS. And with cross-border transactions becoming more common than ever, IFRS certainly is the way forward for the language of accounting. IFRS is used by listed companies in more than 140 different countries across the world, primarily to meet the needs of equity investors in large public companies. In the past, many investment opportunities were hampered because the numbers were presented in different dialects, whether it be UK GAAP, US GAAP or any GAAP. IFRS reporting is now the norm rather than the exception for major companies around the world. An example of a set of IFRS compliant financial statements for a large bank here in the UK can be seen on screen. First of all, the notes to the financial statements transparently declare that the financial statements have been prepared in conformity with International Financial Reporting Standards, IFRS. Essentially, the financial statements consist of a statement of financial position, the statement of profit and loss and other comprehensive income, the statement of changes in equity, the statement of cash flow, notes comprising a summary of significant accounting policies and other explanatory information, and finally comparative information in respect of the preceding period. In 2009, the IASB, that is the International Accounting Standards Board, issued the IFRS for SMEs. This is a completely standalone set of guidance developed specifically for smaller companies. The IFRS for SME is only a few hundred pages long and is less detailed than most local GAAPs, and certainly far less than the 3,000 odd pages of principles and rules for full IFRS. The IFRS for SMEs is available for any country to adopt, whether or not it has adopted full IFRS. So far, over 80 countries have adopted the IFRS for SMEs. For the purposes of applying the IFRS for SMEs, an SME is not determined by its monetary size. Instead, the definition is as follows. SMEs are entities that do not have public accountability and publish general purpose financial statements for external users. Essentially, this means that most non-listed organisations that are non-financial institutions such as banks or insurance companies are likely to meet the definition, including small and medium private limited companies. However, here in the UK, a new set of financial reporting standards, namely FRS 100, 101, 102 and 105 were implemented in 2015 that replaced the old regime of the local UK GAAP. And these FRSs are broadly based on IFRS principles. And rather IFRS is for SMEs per se, it is FRS that non-listed small and medium-sized companies are permitted to use here in the UK by the FRC, that is the Financial Reporting Council of the UK. Many countries, like here in the UK, require the use of IFRS for listed companies, but allow local GAAP, which can be based on IFRS principles for non-listed companies, or IFRS for SMEs. To check what your company is using, speak to your accountant or head over to the accounting policy section of the deck of financial statements, and it will highlight what standards have been used for your company. So what could be 3 useful benefits of reporting under IFRS for small or medium-sized businesses or an IFRS-based local GAAP like FRS in the UK? Well, number 1 is cross-border transactions, particularly with the e-commerce trading companies and businesses with international transactions or even subsidiaries. Adopting an IFRS-based approach could be beneficial in making your numbers more consistent. Number 2 is investors. If you are thinking of attracting investors into your business, then you'll want to probably cast a net as wide as possible, and reporting in IFRS would certainly be a positive for international investors. And number 3 is scaling your growth. If your company starts moving up the gears from a small company to a small group up to a medium-sized company and so on, certainly an IFRS-based approach as early as possible to your financial statements will start to yield benefit, as your reporting requirements will start to become more complex, especially if you are producing consolidated accounts, which must be done using a uniform accounting standard. I hope this video has helped you understand more about IFRS, that is International Financial Reporting Standards, and taking you one step closer to knowing your numbers. As always, let us know in the comments your thoughts on today's video, or if there are any topics you'd like us to cover in the future. Finally, be sure to like and subscribe, as this really does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.